Okay, time to wrap this up for September the 19th. Fall officially starts on Monday, so we're about to end the summer of 2014. Okay, we started off this morning wanting to sell failure to take out 12.5, 14.5, 12 to 14. And the 12 came from this area back over here, and 14.5 was the overnight session high. We had our first buy in the 5 to 7 area, and then our second buy 2000 to 2002. And we've had an up bias the whole day long. It doesn't stop it from selling, but when you go back and look at the long-term structure, the rest of this market is still trading higher. Today was option expiration, and a close between 2010 and 2000 to get rid of the put players would have made the option market makers the most money. So after I went over the charts with you the last hour, well, the last 20 minutes actually, we said we're going to close today at 2005. So if we close it above 2004, I think 50, we've got a new contract closing high. So the first sell came right here off the 951 bar. You're short at 10. Our expected return is 3 points. The low was 550, so you had a shot at 3 to 4. Market comes back, 50% retracement. You're short in the 2007 50 area to retest this low. And the market trades eventually all the way down to 98. So they're really good selling right here. Like we said, that was to stress the call players. The put players are burned. So a close above 2000 effectively wipes out all the put owners. A close below 2010 takes out the bulk of the new call buying. So tough day. Most of the day's trading into lunch was to the downside. That was against the long-term bias, but that's what happens. So we have to trade what we see, not what we believe, and that's hard to do. I was working with a young fellow here a few moments ago, and he did nothing but buy in weakness until he got tired of losing today. And his idea was to trade from the long side. And we talked about if you're wrong twice, you got to go back and rethink. And he said he tried to, but it didn't work. Now, one of the things that works for me that a lot of you, I'm disciplined by the room. I can't get up here and keep making the same damn mistake over and over and over again. I'll get called to account pretty quickly. And but when we trade by ourselves in the silence of our own rooms, the rest of it, we can get on the wrong track, and we can stay there out of stubbornness. And if you're wrong more than twice, 2 times in a row, you got to rethink what you're doing. Okay, got a higher low, higher high. We got a new move out of the middle yesterday. This market is still pointed up. So we can buy weakness, and we can sell failure to take out resistance in the 2010, 2014-50 area. So this screen would still have us a buyer. Looking at the F2 screen. Where am I going on? There it is. Definitely a B. We do a K split. Maybe a move out of the second distribution down here. Maybe we end up with a D pattern. So right here we've got a pretty good selling above 2008. And if we put it all together, you see we got pretty good buying below 2001. The sellers above 8, buyers below 1. That's where we find ourselves. So we're going to assume it was at 5. So selling 9s to 11s will be sell 1. And then 14s to 16s, sell 2. We get up to 14 to 16. I want to set up before I pull it off. Down here, we may even have to get short in the 07, 09 area based on this value area high, and assuming a close at 5. On the buy side, we'll keep our number 2 buy level from this morning. Buy 1 will be 2000, 2002, then 95, 97 for buy 2. Okay, what does the note look like? Next week is auction week for the note, and the first auction will be Tuesday for the 2-year, and that's usually well received. And this is the start of the distribution. So we have this 2412 to 20 area where there's a lot of volume, and resistance starts at 2408. Have a high today of 2. So 4 to 8 is probably pretty good resistance. We have an outside day. Outside days usually yield trading ranges. And the reason for that is they try to take it lower, fail. They try to take it higher and fail. Although we do have a fairly strong close right here at the top end. So we can sell failure to get through the 2 to 8 area. And we can certainly buy against the 24, 28 area support. Okay, F2 screen, pretty solid P. Market is pointed higher. So we got resistance here at 4/5.5. And obviously up here at 12 and then 8 to 12. So really the best resistance starts in the 8 area. So I'll sell failure to take out 2 to 6. And then we'll make an 8 to 12 sell 2. On the buy side, the breakout came from 29. The high was 30.5, so we're basically at support. So we'll make 29.25, buy 1, and buy 2, 17 to 21. Okay, the knob spread picked up 16/30 seconds today, and that's a pretty healthy gain. There's extra juice in the 30-year for when the shorts cover and we get new buying, and the converse is true when longs liquidate and we get new selling. And it's a great contract to trade. This gentleman I was working with today fancies himself an E-mini trader. But he made money trading the bond today and lost money trading the E-mini, and that's a fairly consistent pattern. And we talk about why the attraction to the E-mini, and of course it's volatility, and I've known the stock market my whole life. Don't know much about bonds, but I sure like to trade them. So to me, a lot of people that you talk with and work with in this game, just the toughest contract to trade, bar none, is the E-mini. And it's not that it's not a great contract to trade because of the volatility and the movement. It's just that every damn game in the world that can be played is played in that contract, and will continue to be played. That's where most people enter the game. It's where all the sharks reside, or most of them. And you just can't escape that. So one of the nice things about trading the E-mini is that when you become a mature E-mini trader, you flat out know that you don't know which way the market's going. And over time, you get bludgeoned into the realization that you're just going to trade your methodology and forget the rest. trading the financials, sometimes we can kid ourselves and we think we know exactly where the market's going, and sometimes that proves not to be true. So there's trade-offs for every contract. Yes, you can lose $1,000, $2,000 a day trading the bond per position, just like you can in the others. Okay, the easiest trade to see is failure to extend and take out the range in these highs right here. The selling failure to take out 20 to 24 is the first trade. Second trade is 27 to 31. On the buy side, we took this thing up out of 10, so 9 to 13 buy 1. And buy 2, 1 to 5. You know, each contract has the different pluses and minuses, and everybody howls about false breakouts and go with markets, and in responsive markets we scream about support and resistance didn't hold. So again, I think that you have to be pretty knowing thyself, and you have to give yourself some emotional space. You can't know what's coming next 100% of the time. Okay, gold, we finished pretty weak. I think we're pointed lower. I think it takes new fighting breaking out somewhere. I think the Ukraine, increased hostilities in the Ukraine would be one place that I would look. I don't think the Middle East, because there's just so damn much shooting going on over there, all the way from the west coast of Africa through Pakistan, that gold's in play for a potential government overthrow, and everybody's shooting at everybody. Iraq has been calmed down. We've said that there won't be soldiers' boots on the ground, maybe contractors' boots on the ground, some articles say, maybe advisors' boots on the ground, but you certainly won't see any politicians' boots on the ground in Iraq. I mean, they don't get combat pay, if you know what I mean. So we got ourselves a B. The market's selling. I do like the sell side of the market best, so 20, 22, sell 1, 25, 28, sell 2. Going to make this 10 area, plus or minus buy 1. It's on the assumption that we can take out 14. And then 5 will be buy 2, plus or minus. Okay. Okay, looking at the euro, I like the sell side. Can't see any reason to be a long-term buyer. That doesn't mean that it won't rally, because it does on a regular basis. But if we can take advantage of those 50 to 75 tick rallies in the United States, that trade has made us so damn much money this year, or those that trade out of London. It's just a fabulous, fabulous trade. So here we are in our 40 to 50 area, and we've made a new low. And the London seller's basically at 29, 29.10. Last rotate up in the afternoon stopped at 61, prior to that 67, prior to that 79. So we're at 43, so this 60 to 70 area gives us a little bit of wiggle room for sell 1. And then 85 to 95 for sell 2. We'll pick that up a little bit. Buy side, I think we're headed down, so we're going to play around 25. We'll say 20 to 30. Buy 1, and I really don't like the buy side. And then 28 even. I can get long against 28 because it's a round number and it might bounce the market, but you know me. Never seen a short I don't like in the euro. And crude. What's going to happen in crude? Let's take a look at the F1 screen. Now, I have had a lot and lots and lots of experience with people who trade crude that are in the business. And the only ones that profited from crude, trading crude, that were in the business that's sold futures against cash positions. They were pricing, and they did pretty good. The oilmen and landmen and chemical engineers that I've been associated with that are in the energy business didn't do very well. And depending on the side of if they're in the products, they would get too bearish on crude, and we're too bullish on products. And if they're on the crude side, they're always too bullish on crude. I mean, they had to be out selling people joining them in this new drilling prospect every day. That means you're a long player. So it's really, really hard to do. So if you're too close to the energy business, it may not be your contract. So where are we headed? I think we're going for stops below 90. And then there's going to be really, really good long-term support in this 85, 87 area. I don't know if we can get down there, but I think stops below 90, those are within reach, and everybody knows they're there. I know that contract is there somewhere. So, just like this morning, we're rejecting prices below 90.75, and we've rejected prices basically above 92. Now, this is basis November. Got a couple of single prints right here. You can see we didn't quite trade up there in B. So there's a seller in the 91.90 area to 92.50. This is resistance right in here. So we're at 71, so we're sellers 90 to 15, and then 40 to 65, basis November. On the buy side, 91 to 91.25. Not real comfortable with that one, but the 50 to 75 area I am. So what would make the price of this explode to the upside? ISIS success west of Baghdad. And I put I don't know if I put it in the room or not, but there was an article where there was a raid by ISIS forces on the northwestern side of Baghdad trying to free bad guys from prison to reinforce their fighting stock. Most people don't know this, but usually the farther south you go around the Persian Gulf, the more Shia religious-based Muslims you'll find, and the farther south you go, the harder it is if you're a Sunni to take and hold property, which ultimately is what you have to do if you're going to conquer a nation. That's all I have for right now. I'll see you bright and early Monday morning. I got a lot of yard projects this weekend, and after all, fall is with us. Y'all have a great weekend. May all your football teams win. Until then, take care of yourselves. I'm out of here.